Hello trading friends and welcome back to Forex Focus, brought to you by tastyfx. We are investigating the potential of US dollar as an investment here today. We're going to take a look at a lot of different metrics around US dollar's recent performance and also what could lead to further outperformance, because you're going to see some crazy outperformance, especially for a currency market, in just a second. And we're going to land at some potential outcomes for this US dollar, both bullish and bearish. But 2024 so far, this US dollar has been a great investment. If your money's been sitting in cash in the US, it has gone up considerably. Now, this must be said against foreign currencies, right? That's why we're seeing so many people jet off to Japan or European countries, because this dollar goes further in so many different places. But even with the inflationary environment here that we've been seeing of 2.5%, 3.5%, depending on what you're looking at, CPI or PCE inflation rates in the US, this US dollar has been able to outperform that relative to those other foreign currencies. USD up more than 5% year to date. And now that might not sound like a lot, especially if you're holding Nvidia or Apple or some of these high flying stocks in your portfolio. But when it comes to 6 months of price action in a currency market, 5 to 10% is a lot. You usually see volatilities, annual volatilities in the 5, 6, 7% range. And so US dollar being up right now around 7%, more than 5% in the first half of the year is considerable for a Forex market. Now let's dig a little bit deeper on how you can view this, right? Because it's not just US dollar in a vacuum. It's US dollar priced against these other currencies. And that basket that we were just looking at, that's euro, pound, yen, and a few others. And now if you look particularly at the Japanese yen, for example, this is the highest the dollar's been since the 80s, more than 30 years worth of historical prices. And right now the dollar is at its highest. And so it brings up a lot of interesting potential here. Is it a good investment from this point? Well, that will tell a lot about what kind of investor you are. If you look at a graph like this and you say to yourself, man, that's a lot of US dollar strength, I think it's going to go even further, then you can buy the dollar against the yen, or even you might get a better value, if you look at it that way, versus a euro that right now is at 106, 107, but has been below parity in recent years, or of course the pound, which is still around 125. And so you can see this dollar strength up 5 to 10% against a basket year to date, up even more against the yen and some other currencies, and try to ride that wave higher. That could be a good investment. Or you could look at shorting this market if you think that this is overdone and that dollar can be kind of divested from, especially if you're in the US and you're holding all this US dollar exposure. You can short a US dollar yen market, for example, that's at these 30-year plus highs and try to make money off of the dollar moving lower, or even kind of in a way hedge against your cash positions. But before we get into that bullish and bearish case, I do want to dive into why we're seeing such great US dollar strength. And a lot of it is always going to come back to the interest rate market. The smartest traders out there know that interest rates drive so many different assets, everything from US dollars to crude oil to Apple stock. The interest rate is going to have a huge effect on supply and demand dynamics. And you see here of major economies, and when I'm talking about major economies, I'm primarily looking at the US, UK, Euro area, and Japan, you're seeing the 10-year in the US far surpass those other economies. The UK has been pretty competitive. Of course, you'll remember that when interest rates were spiking, the Fed was hiking, the Bank of England was hiking, the European Central Bank was hiking over the last couple of years. The Bank of England were some of the only central bank counterparts to the Fed that got up to 5%. Now, of course, the Fed outdid them a little bit by being at 5.25% to 5.5%. But see, you're seeing this reflected in the bond market as well, and especially, you might say, well, why is the dollar doing so well against the yen? Well, look at that 4% plus yield on a 10-year Treasury note compared to the Japanese 10-year equivalent, just barely over 1%. That's a huge gap. And so a lot of people are going to buy those US dollars so they can invest at more than 4% in the Treasury market versus that Japanese equivalent only getting 1%. In fact, they'll buy that US dollar and sell that yen to be able to buy US dollars and essentially finance that long in USD, get that 4% plus, and only have to pay 1% in terms of yield. Of course, overnight rates are even more stark. The US's overnight rate still north of 5%. In Japan, they're at 0%. And so the huge discrepancy between the interest rate market in general, whether you're talking about overnights all the way out to 10 or 30-year yields between these major economies, has caused so much US dollar demand in recent years. And you might say, well, Frank, they haven't hiked in 2024, so why are we seeing this rise again in US dollar? Well, the US has seen a resurgence of strength here in its currency because a lot of people were predicting, the markets were projecting, that is, that the Fed would cut rates down to 4% or even lower here in 2024. It's midway through the year, and they haven't cut once, and they're projecting now to maybe cut once or twice. And so at the start of 2024, a lot of people expected that big gap between the Japanese at 0% and the US at 5% plus to maybe come in a little bit on US weakness and some Japanese strength, and you haven't really got either. And so you see this continued US dollar strength. Another piece here is the annual GDP growth, again showing the US to be near the top of the list globally, and at the top of the list when you're talking about the major economies that we were just looking at, those European economies, the UK, as well as Japan. You're seeing extraordinary growth in the US with high interest rates. This was not expected, and this is why you're getting so much confidence in this US dollar currency compared to those alternatives, and why it's been such a good investment is, man, so you're telling me I'm getting the higher interest rate to hold US dollars, and their economy is continuing to outperform, whereas the UK and Euro area, for example, their GDPs have come back close to 0%, which was expected, right? You saw the huge growth coming out of the pandemic, huge GDP growth rates of 5, 6, 7% in some of these major economies. Interest rates rise to fend off the inflation that we saw in that same time, and GDP growth came back in. For the US, it's come back in, but not nearly by as much. And of course, the Japanese problem that continues, they're not seeing really any growth for not even having high interest rates, for being at either negative or 0% for the last several years, the last decade plus, actually. And so, again, a lot of things pointing in that direction of the U.S. And the bullish case for this U.S. dollar would be the continuation of the current gaps, be it interest rates, be it GDP or employment data, all these different data points showing the U.S. greater confidence in the U.S. economy and in the U.S. dollar. And also the demand, here we can break it down from a forex standpoint. If you wanted to, get an even bigger bang for your buck investment-wise, you could not only just hold that cash that's been appreciating, but again, only appreciating relative to those other currencies. And so, unless you're going to the Euro area or Japan, you're not necessarily realizing those gains. Or you're importing goods from them, and that's kind of a whole hectic process. You could, one, hedge by selling out of those U.S. dollars, or you could, on the other side, buy more U.S. dollar exposure in the forex market. And you look here at the major currencies. You could sell euro dollar, sell pound dollar, or buy US dollar, Japanese yen. And then, of course, there are a number of others, but those are the ones that the majors that we've been focusing on here. And it's interesting, you can see the interest rate part of it play out in those overnight funding rates. The swap bid and offer there tell you essentially what you could, all else equal, make for holding these positions overnight. And so, for example, the swap bid, if I am short any of these markets, and looking at that top line, the euro dollar, if I'm short the euro, long US dollars, I'm buying US dollars in this position, then I'm getting a little over a pip to hold that overnight tonight. And these things change all the time, and they depend on when you're putting on the trade and everything else. And if interest rates change, though they haven't changed that much. And then, of course, you see there with the pound dollar, both sides of it about even because the interest rates are so close, and there's a small admin fee involved that's bringing them both to a slight negative. But then you get to that dollar Japanese yen. If you're buying USD JPY, and so you're buying that swap offer there, you're getting right now almost 7 pips to hold that position overnight tonight. And these are taken on the 26th of June, and again, they're going to fluctuate. And so a number of reasons for why you might look at buying US dollar if those interest rates and economic data points stay the way that they are or continue to outperform on the US side. And that could be, the Euro area cutting rates more than the US does, or the Bank of England cutting rates more than the US does, or the Japanese going back into negative territory and the U.S. staying where they're at, or if everybody hikes but the U.S. hikes more, then maybe that U.S. dollar investment would be good. And same with GDP data points and other ones as well. And then also, like I say, the swap bid and offer showing you that interest rate differential, what it can pay you on an overnight basis to be long that U.S. dollar. Now, of course, have to bring in the potential for the bear side of this equation, and that is an overwhelming one, because these currency markets, my friends, especially if you're looking in the long term, are very mean reverting, historically speaking. Now, of course, past performance is not going to indicate what's happening tomorrow or next year. But I would be hard-pressed not to bring up the fact that this dollar-yen example that we've been hammering on, because it's one of the most stark, where the U.S. dollar has been one of the better investments, even in a bullish mode for U.S. dollar in general. I mean, going from 100 yen per dollar to 160, I mean, 60% move in a currency market is crazy. This can all absolutely come back to that mean. And historically, when we've gotten up to 140 or 150, this market has come back to the average has been around 110 to 120, and it's even gotten to double digits multiple times for years at a time, historically speaking. And so you have to keep that in mind. In the long term, this US dollar could revert. But if in the short term or medium term or in the long term, anything is possible, the U.S. continues to outperform these other major economies. That, like I say, that gap or the difference between interest rates and economic data points, continues or even widens, that US dollar could be a great investment.